Hi everyone, welcome back to the business analysis and reporting examination classes of US CPA. In this particular video, I'll be walking you through in detail about management and cost accounting. So that is a subtopic under the main topic of current period oblique historical analysis, including the data as per the AICPA blueprint. So let's dive into to understand more in detail about management and cost accounting.
Hi everyone, welcome back to the BAR classes for chapter 2 business analysis. So in the last class we started with current period historical analysis including use of data. So where we have studied financial statement analysis, then we have studied non-financial and non-GAAP measurement of performance. So today we'll be starting with managerial and cost accounting. This is a slightly bigger topic, so it may take today's session and probably next week also, but it will be worth investing time on it. So if you see in the last class, we have covered all this financial statement analysis, which include common size analysis, horizontal analysis, vertical analysis, ratio analysis, within the ratio, all liquidity, solvency, profitability analysis, all those things we have covered. Then cash flow, viewpoint, comparative analysis, quantitative analysis, reporting and making decision. Then like use of inputs, we did some practice question. And then after non-financial and non-GAAP measures that we have covered. And today we are starting with 2.1.3, which is marginal, or you can say managerial and cost accounting, basically the concept. So in this, we'll be studying four things in detail. First one is about calculation of fixed, variable, and mixed costing. What is fixed costing? What is variable costing? What is mixed costing? That we'll be discussing along with some illustration, examples, and practice question. Then second topic is very big one. So in second topic is about describing and use of different costing method, including absorption costing, variable costing, activity-based costing, process costing, and job order costing. So in that, we'll be understanding about costing method, weighted average method, and FIFO method. Then we'll be understanding about spoilage, scrap, or rework item. Then after variable costing, absorption costing, actual costing, standard costing, activity-based costing, job costing, process costing, and last one is job product and job cost, joint cost. So these are 10 topics we'll be covering in this second main topic. And then after we jump onto the third topic, which is driving the appropriate variance analysis method to measure the key cost driver by analyzing the business scenario. In this, we'll be understanding variance analysis, which include material variance analysis, labor variance analysis, and overhead variance analysis. I'm sure all this costing part, variance part, you might have studied in your college days. Hope you remember these terms. Yes, no, or it's all new.
No sir, पढ़ा हुआ
कुछ याद आ रहा है. Then after last, we'll be understanding about interpretation of the sales result by performing price analysis, volume analysis, mix analysis. It's again like extension of variance analysis from the sales and price point of view. So these four major topics we'll be covering in 2.1.3. Right. So the first one, we are starting with the calculation of fixed cost, variable cost, and mixed cost. Fixed cost, if I say, is equal to like total cost minus variable cost, is generally considered as fixed cost. But what all component comes under the fixed cost, that we'll be discussing. Then after variable cost is again the reversal of the formula, total cost minus fixed cost is the variable cost, and mixed cost is the fixed component plus variable rate per unit of activity multiplied by number of unit of the activity. So that we'll be discussing along with certain illustration. So let's jump into the very first topic, calculation of the fixed cost, variable cost, and mixed cost. So fixed cost. What are the fixed costs basically? First, let's understand that. Fixed costs are expenses that remain constant within the certain production or activity range. They do not change with increase or decrease in production volume. So, like certain example of fixed cost could be your rent, right? The facility you have taken on rent or the office you have taken on rent. So that may have capacity to absorb certain amount of number of people or certain machineries, equipments or level of plant capacity, right? So that will be generally a fix to the extent of certain capacity. If you are planning to increase the capacity, then probably you may enter into a new lease agreement, new rent agreement, and accordingly you will expand the facility. So generally it's fixed cost. Second is salaries to permanent employee, right? To them, basically, when you are when you have a production facility, so there are two type of labor. One is your permanent labor. Second is contractual labor or variable labor, right? So the permanent labor is cost that you need to pay at whether you are doing the production or not, right? Whatever the amount you need to pay, whether you are doing production or not, will come under the fixed salary, and that is comes under the fixed cost. Then insurance premium, if you are paying insurance for the machineries, equipments, vehicles, property, plants, right, all those things, so it is like a fixed cost whether you do the production or not, the premium remain the same, right? Lease payment, or in addition to that, for example, if you are purchasing fixed assets, so the depreciation cost of the same is also considered as fixed cost, right? These are certain example of the fixed cost. So to calculate the fixed cost, you can sum up all the costs that do not vary with the production level or activity, so that will give you all fixed cost.
सर ये जो ऊपर हमने डेफिनेशन लिखी है फिक्स कॉस्ट की, दैट आर एक्सपेंसेस दैट रिमेन कांस्टेंट विद अ सर्टेन प्रोडक्शन और एक्टिविटी रेंज, isn't this true for fixed cost?
Say that again. It is not true for
स्टेप फिक्स्ड कॉस्ट. ये स्टेप फिक्स्ड कॉस्ट की डेफिनेशन ना.
what is step fixed cost? Yeah, you're right. So to one extent, this cost remains same, and then when you go to the next level, it will increase, right? That's what you're saying.
Right.
Yeah. To that extent, for example, you have a plant which has a capacity to produce 4,000 metric ton of urea, right? For that, whatever the, you can say, rent you are paying, whatever the machineries you have, the depreciation is being charged on that, and certain fixed, fixture equipments which you have, the depreciation on that up to that level is considered as fixed. Yes, you are right. So it is being step fixed costing. Yes, you are right.
Okay.
Yeah, but to that extent, we need to consider that as a fixed cost if the production is to that extent level. As you increase the production, then you need to go to the next step, and accordingly, if you go to the next step, you will be enhancing the capacity. To enhance the capacity, you might be taking more places on rent, more machineries or equipment on which the depreciation or amortization expense will increase.
Okay, sir. Okay.
Right, everyone? Arun, Vartika, Manish, so far so good?
Yes, sir.
So in a simple word, when you have total costing or when you have breakup of variable costing, if you reduce like variable costing from total cost, it will give you the fixed cost, right? Next is variable costing. What is variable costing? Any idea?
So variable costs are basically material costs, labor costs, which are like mentioned, directly proportional to the amount that we are producing as output. That is variable cost.
Yeah. Any example you would like to share?
So mainly direct material, labor, यही होता है, और units of electricity can also be.
It depends.
Yes, it can't be generalized. It depends on situation to situation electricity unit sometimes.
Yeah.
But mainly labor or material ही है.
Direct labor and direct material.
Direct labor and material, right?
Right, Vartika, Kashish. Arun, would you like to add anything?
सर एक फिक्स कॉस्ट में सर डाउट था
Mm-hmm.
सर इफ वी टेक एन एग्जांपल ऑफ इंश्योरेंस प्रीमियम सर तो सर वो तो चेंज होता रहता ना एवरी ईयर
Mm-hmm. But insurance premium get changed, but the amount is, the cost is fixed. It's
नहीं सर
not,
वो भी चेंज
it's
होता है
not dependent on production.
ओके
When, yeah, we need to understand both fixed cost and variable cost parallelly. Variable cost does not mean the cost which is changing.
ओके
Right? For example, this year you are charging depreciation 10. Let's say you have fixed assets of $1 million and you have a depreciation rate of 10%. So this year you may or you are charging on a return down value method. Let's assume 20% return down value method. So the first year your depreciation is $200,000, but second year it will be $160,000, and in third year it will be further less, and so on and so forth. So if the amount is changing, that does not mean it's variable.
ओके ठीक है
Right? So variability comes from the like Akash, Ayush was sharing, if it is directly related to the production, directly related to the activity, or directly related to the unit produce, any expense that we make which are being directly related to the unit of production or unit of activity or the volume of sales. Right?
गॉट इट
So yeah, we will be coming to that as of now. We have just finished the fixed cost concept, but yeah, your point is right. We need to look at both the things parallelly. So fixed cost and variable cost to understand the overall concept. Right? Vartika, Manish, any example you guys would like to add on variable cost or fixed cost? Are you guys here?
Yes, sir.
Would you like to add any example?
No.
Okay, that's good though. So yeah, variable costing, like we were discussing earlier. So variable costing are basically the expenses that company do incur for the direct production to change the production volume or the activity. For example, your raw material which you are purchasing, right? Direct labor which is into the production unit, or variable utilities which you are using like stores, spares, right? And in addition to that, direct overhead as well, I would say. So overhead which is being directly related to the production. So for example, you have let's say uh, um, job worker charges. So for example, like you are into, let's say, t-shirt manufacturing company, right? So t-shirt manufacturing company, what they do, they procure the raw material, right, at the high volume, so that they can get the cheap price, and then to that raw material they give to different job workers. So some job worker do the cutting part of it, some job worker may do stitching part of it, and then after they do final finishing, labelizing, and then packaging of the t-shirts at their in-house, right? So here in this case, the job work which they have outsourced for cutting and stitching would be considered as overhead cost, and that is variable to each unit of production, right? On the other hand, like one example like which Ayush was sharing, the electricity cost. So there may be possibility that machine has certain capacity to consume the electricity, and basis the consumption of electricity, they will be producing the specific product. For example, there is a you can say tire manufacturing company, right? And they have like molds, right? Molds is basically the one who convert the rubbers into the shape of tire, who give the shape to the tire basically. right? So there may be possibility that mold have certain unit of electricity consumption per mold, right? So then that electricity can be considered as overhead cost to be charged per, you can say, per unit production by the respective mold, right? So that can be considered as a variable cost. So variable cost is basically the cost which is being directly related to the production of the specific unit. It includes your raw material cost, which is direct material cost, your labor cost, your direct overhead cost, and your utility cost, which is being directly related to the production of activity. Right? Make sense?
Yes, sir.
Right?
Yes, sir.
So to calculate the variable cost, you can subtract the fixed cost from total cost. If total cost is being given to you, fixed cost is given to you, then variable cost is the remaining balance, right? So Kashish, now it is clear what is variable cost and what is fixed cost.
Yes, sir. Yeah.
Hmm?
Yes.
Now coming to the mixed cost, third concept. So mixed cost is also known as semi-variable cost. So that is also known as semi-variable cost. Any idea what is semi-variable cost before I jump into the detail? Any idea about semi-variable cost?
So semi-variable cost is like cost which is fixed to a point, and then beyond that point it is variable.
जो मैं एक्चुअली कह रहा था ना सर स्टेप
Step fixed cost.
वो
वही
एक्चुअली
ये
यही है
semi-variable cost ही है.
Hmm.
What I think. Because semi-variable में यही होगा ना, partially fixed है कि भाई एक point तक अगर आप इतनी production कर रहे हो, so you will have to incur like 10,000 rupees for 100 units maybe. But after that point, because of economies of scale or whatever it is, it will keep on changing. Not on to economies of scale, but it would keep on changing, because अगर आपकी machine की capacity ही exhaust हो जाती है उसके beyond, तो आपको और machine लगानी पड़ेगी, and then you will have to incur more cost, and that will not remain fixed. So that I think is mixed variable, because step up cost or mixed variable cost I think would be the same thing.
Anyone else would like to add? Vartika, Arun, Kashish, Manish. Okay. So two things, like the step cost, what you're saying, I think to the best of my understanding, is the step cost when you are elevating the overall production capacity and you have to incur additional fixed cost to extend your capacity, right? Whereas mixed cost or semi-variable cost is basically there are some amount of the fixed cost and then remaining will be variable cost. For example, like your electricity bill, right? You have fixed 1000 rupees meter charge and then 8 rupees 50 paisa per unit charges, right? So for example, if you are into the printing industry, right, there is a fixed charge of creating the pallets and then it's a variable cost of the printing of each unit, right? There may be like in the production also there may be some fixed cost for the setting up of the production and then or maybe changeover of the production, and then after it is a variable cost. For example, like again, if I give you an example for tire manufacturing company, so maybe initially you have set up a mold for let's say Maruti car tire, then you want a Hyundai car tire, so you might be changing over the molds from the machinery from the respective category. So that cost would be considered as a fixed cost, but after that, whatever the cost you are incurring is a variable cost. So that is semi-variable cost, in which some component of fixed cost is being involved, but remaining is variable. Make sense?
Yes, sir. Yes, sir.
Kashish,
Yes,
Vartika,
sir.
Manish?
बिल्कुल clear.
So mixed cost is also known as semi-variable cost, have element of both fixed and variable cost. Have element of both fixed and variable cost. They consist of fixed component that remain constant and variable component that change with the activity. The formula is fixed cost plus variable rate per unit of activity multiplied by number of unit or activity, right? To calculate the mixed cost, you will need the data on both total cost and the level of activity. That is production unit, machine hour, miles driven, as the case may be, right? Associated with that cost. You can then use the regression analysis or other statistical method to determine the fixed component and, and the variable rate. So there's an example to it. If you have data on total maintenance cost $5,000 and number of machine hour 2,000 hour, you can calculate the mixed cost as follows. Mixed cost is equal to fixed cost plus variable rate per hour multiplied by number of hour. So let's assume the variable rate per hour is 2.5. So mixed cost is equal to $5,000, which is your fixed cost, plus 2.5, which is variable rate per hour, and you have 2,000 hour, that is $5,000. So $5,000 plus $5,000, total cost is $10,000. Have you got it? So
Yes,
the
sir.
variable is
Yes,
2,000
sir.
hour and your rate is 250. So 5,000 is the variable cost and this 5,000 is your fixed cost. So your total cost will be $10,000. In this example, mixed cost amount to 10,000 consists of fixed component 5,000 and variable component based on the machine hour work 5,000. Mixed costs are essential to understand the cost behavior more accurately when neither the costs are fixed nor all the costs are variable in nature. So let's do some practice question. Which of the following costs can be eliminated by reducing production to zero? Which costs can be eliminated by reducing the production to zero? Fixed cost, variable cost, mixed cost, or semi-variable cost? What is the call of the question? Are you guys here?
Sir, basically it is asking which cost will be impacted by production.
तो
So
वेरिएबल ही लग रहा है
Variable cost.
Right, everyone? Vartika, Arun?
क्योंकि सर फिक्स का फिक्स रहेगा मिक्स कॉस्ट का भी सर फिक्स तो रहता ही है बट थोड़ा सा वेरिएबल है वेरिएबल का ये है कि जीरो में हम रिड्यूस कर
So if you are not producing anything, then you can reduce the variable cost to zero,
सकते हैं यस सर
right? So yeah, correct answer is second, variable cost. Next question is, which of the following is an example of variable cost? Rent for factory building, depreciation of machinery, direct material used in production, actual employee salary.
Direct material used in production.
Direct material used in production,
यस सर
right?